So, good afternoon, everyone from everywhere you are in the world. So we'll be starting this class very soon. Um, Oga Kane, your mic is mute. You're on mute. Oh. Okay. Can you hear me? You can hear me, right?
Yes, sir.
Okay. So I think we should just go ahead to start from where we stopped the previous time. Um, okay. We would start with the types of SNR. We Okay, let me start by explaining what SNR is. Like in our previous class, SNR support and resistance. So it has different ways in which you can identify an SNR. We already explained that. Then we are going to talk about the apex of SNR. You know, when we're talking about the market structure, we talked about different types where we talked about the uptrend and downtrend. And as you can see from this chart, we are in an uptrend, right? From here down to here. Okay. Yeah. Then it came down here to the from the low to a high, then higher low, uh higher high, then higher low, higher high, higher low, higher high. Then if this trend is going to be continued, we should be having our higher low, perhaps from here, or maybe it comes to pick this level here that I have indicated here. So now, how do we know which is your apex? Your apex is where you have your highest high from. It's like a region where which is your let me say the highest level of be it supply or demand. So if your apex is here, if your apex is down here, it means maybe you are expecting a structural break of something. But from here, this is where your apex will be. If you are looking for a support level to buy from, this is where your apex level will be. Reason being that when we are in a higher uptrend, you understand, and you are looking for a supply level to buy from, we have a supply level here, which we are still going to get down to, and we have another supply level here. Let me bring it down here. We have another supply level here. So if this market comes here, there's a supply level here. It doesn't use it. This is your apex of this region. And if it is your resistance as well, if the market is coming back, there are different resistance on the way, like as we have mentioned, traditional resistance. So let's make use of the trend lines. When we see a resistance here, you can see that the market has been reacting from this level as well. What time is it? Okay. So the market has been reacting from here. It can break it, it might not break it, but let's say it breaks it. Where will be our apex level be? Our apex level will be at the highest level of resistance on this structure. So on this structure, this is our resistance here, and this is the apex of the resistance we are looking at here. So let's go to SBR. SBR is also easy to identify, like we have mentioned earlier on that traditional support and resistance just requires two candles of which you can see as we jotted it out here. You see, for your support, you need to see a sell candle and a buy candle beside each other. So you can see your buy candle here, your sell candle and your buy candle. There are different support levels that you can see from this chart, but what we are focusing on now is the SBR. So how do you identify SBR? SBR simply means support break turn resistance. So When the support breaks, how do we see it? Okay, let me give you an instance. We have a support level here. Let me return this. We have a support level here. As you can see it, we have a um um sell candle with our buy candle beside each other, and it was broken. How did it get broken? Okay, it was initially respected here, but when the market came, it broke it. Oh, sorry, this is not SBR. This is a mistake. This is what we call left shoulder, not SBR. Let me look for a better example. This is not SBR. What we have here is let me look for a good example of SBR, support break torn resistance. So okay. Sorry, the way this my chart is so messed up. We'll see a support breakdown resistance soon. So what we've been having here has been a left shoulder, but let me look. We should be seeing that more around a downtrend market. Okay, we've seen one. Okay, let's go with this. As you can see, there's a support level here. There's a support level here. So technically, what you should be expecting to see from this support level is, this market was going up and it was close. It rejected from the all-time high here, and then it came down, created a low here, went to here, created a lower low, created a lower low, lower high, then created a lower low. Then when it created a lower low, we have a support level here. Before it created this lower low, this support was supposed to, like, push it up to create the higher high, but no, it got broken. So when it got broken, what happened? This level became a resistance point. The support got broken, then turned to resistance level, whereby you could see that when the market was coming back, this must be a news action. The news action, it was supposed to, when the market was coming back, where did it reject from? It rejected from this support here. It rejected from this support here and then went back up. It was supposed to keep going up because we saw a support level pushing the market up, but because we have a support turn resistance here, it's got rejected back. It reacted from this support turn resistance here, support break turn resistance. That's SBR. So we have an SBR here. We can see SBR from different levels. If we look closely, I didn't set my mind to identify them down before this class, but next class I'll make sure I do that. So I'll make sure I set down some examples before we have this class. Okay, we can see another SBR here. Let me bring this trend line over. So we have a support here. So we have a support level here. So it got broken when the sell candle was coming back down, and then when the price was coming back to this level, it got rejected at first, came back, still got rejected. So before it eventually broke our SBR. So let's move on to the next. We've talked about the apex, We've talked about SBR, then let's go to RBS. So let's go to RBS. RBS simply means resistant broken tone support. Yeah, resistant broken tone support. So we can see something around here. Let me see if this is a good example. Okay, yeah, we have something here. We have something here. So this resistance level, when the markets go down here, it got rejected, even though if you had set your entry here, your stop loss might have been taken. But then by the time the price was coming back, it's rejected from here. I mean, reacted from here, and then we saw our market turning back from here. That's our resistance here got broken through this buy, and then when the price was coming back down, it's respected here, and we can see another RBS here just below it here. We can say this is the exact one that the market made use of, that the price made use of. So when we have a resistance here, this price action was not supposed to break through because we have a resistance here, but it got broken. And then by the time the price was coming back down, it came to this same level, the exact level of the previous resistance, which has now broken and turned to support. That's why we can have the continuation of this price action. So let's move on to the next one. I think I've explained that, although we can get more examples. There are a whole lot of examples that we can make use of. Let me see. We will definitely get different examples if we look closely. Okay, let me give you this for instance. Now, we have a resistance here. It got broken. And what did it give us here? We are having a um we have a SBR level here. Even though the market, I mean the price has not gotten here, we have a RBS level here. Even if it's going to break it, we might see some reaction from it. We'll see some reaction from it, and then we'll see there are different levels of RBS. We have RBS here as well. RBS here. So resistance broken, turn supports. Okay, we already have this as an example. So let me look for something else. If we see, okay, so here we have a support here. When it got broken, it became a resistance, turn support. Although it eventually got broken. That's where we have what we call left shoulder. When you have a resistance, I mean a support broken the first time, which has turned to RBS. When it gets broken the second time, that same level, when it's coming back, we turn to a left shoulder. So, but I'll explain that in a better way. Hope I am not talking too much. I need to understand if you understand what I'm talking about.
Yes.
You totally understand?
Yes.
All right. If you have a question, you can signify so that I can quickly brush it up. So I want us to be done with these types of SNR today. So now let me go to the left shoulder. Left shoulder is actually very, very nice and sweet in the sense that you get it in most situations. It's mostly respect the left shoulder when you have a good condition that's, it's not just anywhere you see a left shoulder that you expect it to be respected, but then when your analysis is correct, you would actually enjoy it. So, I mean, those are the levels you can always look at when you see a price. You have to understand what the market is doing. Most of what we are talking about right now is not what you use to pick your trade, but they are the situations that will occur in the market, that you use to understand what is happening in the market. Understanding what is happening in the market is very important. So, for instance, we have something here. We have a support broken, turn resistance. As you can see it, right? Let me
Yes.
let me bring this back a bit so you can see it. We have a support here, it got broken, turn resistance, then it got broken again. Immediately got broken again. What we have now is a left shoulder. So immediately it got broken, it becomes a support back. How do we call something a left shoulder? You know, support at first, but it got broken and turned to resistance. Immediately that gets broken again, it turns back to support. So when you see your support level here that has gotten broken twice, when this market price is coming back down, you have a supply level here. I mean, you have a demand level here, rather, not supply. You have a demand level here. So your demand level, which is where you should be buying from, which is your support. So you have a demand level, the theory of economics, wherever there is a big number of demand, what happens there? Price becomes more expensive. Or I don't know how they used to put it, demand and supply. The law of demand and supply, in the sense that the price increases when there is high demand, and when there is saturation in the market where there's a lot of supply. You understand? It means there's a chance that there are chances that the price will reduce. There will be, it's either it's static at that price or it starts depreciating. So when you have a demand level here, there is a high chance that by the time the price gets to that demand level, if it is a valid demand level, the price of whatever assets you are trading will start increasing, which means if you had bought at that moment, the price will start appreciating to whatever level you are expecting it to get to. Do you understand? So, and the same thing for the supply, which is your resistant level. So supply, once there is a lot of supply region, like let me just put it in a very um um funny way. It doesn't mean that that's what's going to happen in this market, because we are not yet at the point where we are explaining why you should, take a buy or a sell, how you should take a buy or a sell. But I'm just giving you an instance. But what I'm trying to explain now is that when you have a lot of supply level here, supply, 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 I mean, yeah, supply, 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 supply. What is that indicating to us? Very close at the same level of area. It is explaining to us that there's a lot of supply already in this region. What is this trying to explain to us? What should we be considering? So I want to get your answer. What do you think we should be considering when you are seeing a lot of supply level, a lot of resistance level around the same level, according to the law of demand and supply?
Yeah, we should be expecting a fall in price.
Exactly. So we should be expecting a fall in price around this region. Let me mark it out. We should be expecting a fall in price around this region, because if the price, oh, sorry, why is this not okay? So if the market is, I mean, the price is coming back up, and let's say you get a breaks whichever level of this level, we should be expecting the price to still fall. Do you understand? So, but that doesn't mean this is what this market is going to do. Do you understand? That doesn't mean this is what we would explain. This is just a virtual explanation to understand that you really understand the concept of supply and demand, in the sense that once you see a value, I mean, a viable supply level, you're expecting a price fall. And then, so Let me delete this. Okay. Do you understand left shoulder now? Or should I give you my examples?
Yes, I understand, but I need like
More
just the
examples.
definition for
You said
no the definition for left shoulder.
left shoulder is when you have how do I define it in a very simple way? To simply put it, in either assets, in either supply or demand zone, either your supply or either your supply or resistance zone. When the market price get broken twice, the initial position is maintained. So I think that's even more complex than understanding it itself. But when you have a supply here and it get broken, it's supposed to turn to RBS. It turns to RBS. Okay, let me put it this way. Whenever a RBS, okay, let's put it that way. Let's put it that way. Okay. In a very simple way, whenever a RBS gets broken, you have a left shoulder, which means the level has reverted back to resistance. So it's like this. You can, if you want to make it very simple for you to understand, so you can easily call that, you can call that RBSBR. If that will help. So you can call it RBSBR if you want to be able to understand it, which means resistance broken turn and supports, then support